Hello guys, it's Randall with Bitraged. So I want to do an update here on Bitcoin, where we're sitting at. I know a lot of you have been asking questions, you'd like some answers, and so I'm just going to talk about a few different things. We're going to look at some charting, a few of the moving averages, and just discuss kind of where we're at and some projections of where we may be headed. Before we get into that, I'd like to talk about something that is on my heart, something that is important to me and I have appreciated. So we're going to look at that, and then we're going to jump right into the chart. So we've had a couple of comments like this, actually a number of comments of this nature, and I'm highlighting this one because it really exemplifies the spirit of Bitrage. It really shines through what this channel is all about. And this subscriber, Purple Flower Pusher Denver, says, "Thank you so much for your information. After watching a couple of your videos and learning how to read charts better, I can say it actually works. I was trading last night, but for a couple hours I just watched. I'd pick a spot of what I thought would be resistance and support, and whether or not what I was looking at would go down or break through. And I was over 90% accurate compared to random guessing and getting screwed. Thank you so much for your content." And then they replied, again, basically saying that it's between 80 and 90% that they are getting correct. Now, I want to make it very clear, just starting out in trading, an 80 to 90% accuracy level is really good. Now, obviously, you have to spread that out over a period of, several weeks, several months to really get an accurate reading. But just starting out, 80 to 90% is pretty exciting. And what's important is to really focus on the facts, focus on emotionless trading, focus on looking at the technical analysis, looking at and understanding how to read charts. There was one person who commented and they said that they learned from our videos not to trust charts because we didn't retest 6,000 support. That's a clear sign about an emotional trader. It's a clear sign of somebody who is just swept around by whichever way the wind's blowing. Now, I want to make it clear, the charts are never going to be 100% accurate, but they're going to be way more accurate than anything off the top of your head. So we don't have a foolproof way of knowing exactly 100% every time where the market's going. But what we do have is a way of gauging, a way of looking at history, a way of understanding where trends tend to incline towards because of certain data. And when we understand that, it can lend itself to a proper or a more educated decision. And this is what people like this subscriber are finding out, that it does actually work. So if you've seen comments on videos or on TradingView where people say that technical analysis is BS, what's really BS is the people saying that, because they obviously have got their heads stuck in the sand and it's buried so deep they're unlikely to be able to get out anytime soon. The fact is that this kind of market is very dangerous for somebody who is unwilling to understand or accept the fact that there is nothing perfect or set in stone. And until we can really establish that, then you really shouldn't trade. We had another comment, actually several, but there was another comment that somebody had mentioned that they began to paper trade, because I mentioned I recommend paper trading, which is basically you set up a spreadsheet and you keep track of where you would enter and where you would exit if you were using real money. You figure in fees and you figure out your profits or your losses. Then you go back and you figure out if there was any way you could have made better decisions, and you figure out what your average profit is if you're doing well. And then once you master that, you start trading with real money, and it's very effective. We've had a number of people who've commented and messaged us and said that they started that way and now they're starting to trade with real money and they're starting to see some profit. So start slow, start small, and build up. There's nothing wrong with making $4 profit on a trade. There's absolutely nothing wrong with that. There's absolutely nothing wrong with making 1% on a trade. Nothing wrong with it. If you're making money, you're making money. That's what's important. And so don't get hung up on trying to make $1,000. Just focus on facts, focus on getting the trading down. So that's something I really wanted to address. And just one last point before we get into charts. We started this channel because there were so many channels cropping up on YouTube running into the last part of 2017. Channels just utter garbage. You have channels like JR Business. You have a bunch of teenagers who, yeah, they're successful in their car business, I assume, but they know nothing about cryptocurrency, and now they're just a pump and dump shill team. So total garbage there. You have hype up people like Crypto Love that are very good talkers. Seems like a decent guy as far as that goes. I don't really have a problem with him as a person. Totally clueless as far as actual trading goes, and yet he's selling courses. And I confronted him on this. He actually commented on one of our videos. Like I said, decent guy, left a nice comment. Don't have a problem with him at all, except for the fact that he shouldn't be selling courses. He doesn't know what he's doing. He shouldn't be selling courses. His course is garbage. It's on ICOs. It's way overpriced. It's information, mediocre information you can find anywhere. And you have people like that. You have Crypto Crow, who is a total shill, just promotes a trading program where he's getting affiliate payouts, and just the list goes on. You have Supo Man, really just a horrible shill, just a terrible person. If you go against him, he conned a whole bunch of people recently, and people commented wanting answers, and he basically told them, literally, to go kill themselves. So this is the kind of people you're working with. You're working with clueless idiots. You're working with very smart con artists and just mediocre shells, all who are looking just to get a buck off from you. So we started this channel in the hopes to actually offer valuable information. Now that doesn't mean that every piece of information we provide is going to give you a 100% accurate trade. But what it does mean is that every piece of information we provide is based on solid research. It's going to be based on solid technical analysis. It's going to be based on real world practical information that we use ourselves. It's not off the top of our heads. We're not shilling some nonsense scam course or trading bot or some cloud mining pie in the sky Ponzi scheme. It's all going to be valuable information, and that's what this channel is about. So to those of you who have supported us, who have commented, telling us how much it has benefited you to watch these videos, we really appreciate that. And that's pretty much the purpose of my rant, is just to say thank you to those of you that have supported us. We really do appreciate it. And to those that have seen this channel as a way to make buys and sells, you missed our point. You missed the point. That's not the purpose of the channel. The purpose of the channel is to give you the information to figure that out on your own. We're not a pump and dump. That's not what we're here for. We're here to provide you information so that you can be successful in trading yourself. So where is Bitcoin headed? It's seen some interesting movement over the past couple of days, and we've had a number of comments asking, specifically me, if I still believed that it was going to go back down to 6,000. And basically the impression I'm getting is there's a few people still who are waiting for me to give them an answer so they can buy and sell. And I've tried to make it clear that we are not giving financial advice. We're not telling you when to buy and sell. We're telling you our opinions based on chart reading, based on statistical analysis, based on past history, and then you need to make a decision on your own where you're going to stand and what you're going to do. So there's a couple things I wanted to address. First of all, we are at a point where we've broken through some resistance areas, which have now, if you've been watching our videos, you understand a little bit about chart reading, have now become support areas. So this area here has now become a support area, which is actually a decent support range. So it decreases the chance of us retesting 6,000. That's important to understand. As you build new support, as you go up, it decreases the chances of coming back down. It doesn't eliminate them though. And there's still a possibility of dropping to 6,000 or below. That's still a possibility. That possibility has not been eliminated yet. So there's two ways that could basically happen. The first way, and I'm going to explain our Fibonacci retracement and resistance points here in a minute. But basically you have a couple options. The first option would be that we are in a bull trap, which is very possible. And if we are in a bull trap, we are going to see the price continue up to a certain point, maybe not that high. It's probably more likely to be below this line here, and then we're going to see it drop off. That's possible for a bull trap. Now, if we are in a bull trap, we may not drop down to 6,000. We might drop lower or slightly higher, but there's a lot of indications that that is possible. There's some stock and forex traders that are looking at where Bitcoin is at, and they're basically calling it a bull trap. People I have a lot of respect for, but that doesn't mean that that is what is actually going to happen. It doesn't mean that that's how this is going to end. So we have to look at these things as possibilities, as potentially happening. So let's look at the chart here a little bit. All right, so what we're looking at here, I have the Fibonacci retracement, and what you basically are looking at is each of these lines. Again, you're either looking at support or resistance depending on where you're sitting at. We're sitting here, so these lines below it have now become support levels. And you'll notice that it actually follows very closely to these lines. And you'll notice that key areas like this point here, the chart, it kind of rode that line. And you'll notice that it tried to come back and break through this point as well. So when you see that on this end, that this was a very hard point to break. It could not break back through that. And then we dropped down here and it tried again to break through this line. And then it couldn't. And then we dropped down to here. Now we're coming back up and we can't break through this 10,300 line, which it's 10,222. But you have to understand that there is actually a range around these lines because there's anticipation coming up to and around them. So that's what you might see on a chart, something like this. Right, it's not right on the line, but the wick comes up above it. So you see things like that. So don't expect it to be 10,222.29168.543 exactly. All right, important to understand. So we're looking at this, and we're coming up on this 10,000 again. I'm going to say 300 line because I really see that as the point to break. All right, so that was an interesting article that popped up, so I had to go read that. But anyways. So we're looking at this chart, and this is really the point where we have to break, and we've been hitting up against it here. Now on the daily, we've hit it twice, and we bounced off it twice. And essentially, we really have to break through this soon, or else we're going to see a retracement. Most likely, it's going to retrace down to the moving average here. Either a small retracement down to either 9,400 or 9,600, or a larger retracement down to the moving average of 8,800 or around 8,500 to 8,600. So that's what we'd be looking at if we really get pushed off from this 618 Fibonacci retracement line, which is essentially, again, it's a resistance line. So don't get caught up in, really Fibonacci is really simple. It's just support and resistance. And if you haven't watched any of our other videos, you really need to go back and start watching at least the last 5 or 6 videos we've done, especially the ones on Bitcoin, this trend. It'll help you understand resistance and support so much better, and that's the key to understanding charts. So what we're looking, if we're really in a bull run, if we're really seeing the bulls take the forefront here and they're winning, we need to break through this line. It is crucial. And the issue we're going to have is once we break through this line, we essentially have a huge resistance area here. You'll notice you have 2 moving averages. You have all this resistance from this first period, and if you were to back, you'd see resistance back there, and then you have this resistance line, the 786 resistance line, which is essentially right around 11,300 to 400. So those are our 2 points we're looking at. We're looking at to break through this area and to break through that area next to really confirm that we are in a bull run. Now, even if that happens, that does not negate the possibility of us being in a bull trap. We essentially have to break through 13,000 to give a clear indication that we are most likely not in a bull trap. But even at 13,000, it's still possible to be in a bull trap. One thing you have to understand is that a lot of people are calling this the end of the correction, which is kind of foolhardy, because look at this chart. You have bears. This is not a bull trend. Okay, it's not a bull trend. You have definitely some bull movement. It's considerable bull movement, but it's not a long enough period to be considered a bull trend because you have too much bearish movement behind it. So what we do is we would draw a box around this area, and what we'd find is we are in a bearish trend through this whole area, and we're at the point where we're trying to break out of it, but we're not in the clear yet. And that's what we need to understand, is we're not in the clear yet. And look at all the bearish movement we have. This is a bearish slide. All right, it's a total bearish slide. So to come in here and just see this movement and call that a completion of the correction is foolhardy. Now, I'm not saying that it isn't the beginning. It's possible this is the beginning of the end, meaning that we are getting close to seeing a real bullish movement up, and we will not see the bottom in this area again. That's possible. That is possible. I'm not sure I'm buying that quite yet, but it is possible. So what could we be looking at here? The daily right now is not really looking too good. We're kind of bouncing off. That doesn't mean that we can't come back up, but if you look at some of the other areas where we've seen similar candles, and again, it's not a complete day yet, so things could definitely turn around here. So we can't call it yet. But if it continues, it ends the day like this. We've seen in the past where that has happened, and it has not looked good for the chart. We've seen after that a bearish trend. There's other indications of the same. Even in the RSI, we are seeing some divergence, indicating the possibility that we may not be really truly in a full bull run right now. So let's look at this on the stock RSI. We have a higher high in the RSI, but if we follow this up, we have a lower high on the price, which indicates basically an underlying weakness, and it's found in retracements. It's found in a downtrend, and it usually means, and I say usually, it's not 100%, but it usually means that you're going to see a drop off. Now, how far again that drops off is going to depend on buyers and sellers. It's going to depend on whether this support area holds. So that there's a lot of factors that determine how far we go down and, you know, the extent of the damage, if you will. But this is an indication, and it's a fairly significant divergence. It's not a small divergence, it's a fairly significant one. So I'm not telling you that this means we are definitely going back down considerably, but I'm telling you that it creates an indication of that being a possibility. And again, as I've mentioned before, you don't just take that and say, okay, RSI divergence, let's run with that baby and let's go. No, that's not how this works. What you do is you take everything into account. And there's a couple other things I want to mention. We've seen volume come in, but it's not been a natural volume. It's been a weird sort of unorganic volume. It doesn't seem natural to me. Again, I'm not saying that means that we're not going to see this continue upward. That's not what I'm saying, but I am saying that we need to still be a little cautious. If you're comfortable buying right now and you think it's going back up, I'm not telling you not to. But be cautious and make sure that you've researched this well. So the volume coming in, it kind of came in and then it just kind of fell off. So I'm still watching that to see how this progresses over the next couple of days, because I really feel like there's something that just seems a little off. There's another interesting thing. There was an analysis posted, someone posted it on Twitter, and basically showed that in a certain area, in the chart, which would be, let's see here. It's between the 10,250 range and running up into the 11,000, I think it was 11,500 range. There's huge sell area. It's a huge sell area, which basically is a lot of people from this area looking to sell off and make some profits. They're trying to sell off there, which indicates two things. First of all, if a bunch of people, a large amount of buyers, are trying to sell off in that area, it's going to push the price down. Now, again, how far it pushes it depends on whether buyers come in and say, no way, we don't believe it should be down in this area. We believe that it should be, we are in a bull trend. We need to continue up. So it depends on the buyer conviction. And right now, I'm not seeing buyer conviction. I see several spurts of volume that pushed us up to this 10,000 line. To see and confirm buyer conviction, we need to break this line. We need to break this line, and we need to close on the daily above this line. That will give me an indication that the bulls are having conviction here. That would give me conviction of that. Until that happens, I'm still leery that the bulls are actually in control. I'm still leery of that, and I feel like there's still a possibility that we are in a bull trap, which basically a bull trap is where the bears are still in control. It just looks like there's a trend reversal, and there's not. So what we're really looking at is breaking this line. We're breaking through our moving average and averages here, and then breaking through the 786 Fibonacci level, which is going to be pretty tough. I'm going to be honest with you. Confident if we hit this line, we're going to bounce off it. Even if it's just a short-term bounce and we continue back up, we're going to bounce off that line, right? So if you see it, the price jump up to here, in my opinion, my humble opinion, that would probably be a good time to sell. And most likely you'll see a bounce either back down to this support or below it back into the 9,800 range, at least temporarily. And if you wanted to, you could buy back in at that point. That would be my logical assumption. What would be the most logical situation to occur at this point? But that's kind of what we're looking at. You'll notice a couple things here on Fibonacci. First of all, you have these small areas, which basically are resistance areas close together, packed hard. You have to break through like one after the other. It's like literally wall after wall after wall. You'll notice once we break through 786, you have a larger gap. Then it's basically 13,000 level. If we were to break 13,000, we have all the way up to 17,000. Now that isn't to say there isn't resistance, because there is. We will have a clear conviction if we get through this, a clear conviction from buyers, or we should anyways have a clear conviction from buyers, and we should have a fairly clear run up to 17,000. So if we break, and if and when we break 13,000, and we again close over that line, we hold it, we should see a nice clear run up to 17,000 in a not too long period, in my opinion. I don't think it'll take too long to do that. And then the next step would be to retrace to 20,000, and I really think that that is totally possible before the summer. But that is just my opinion. But it's important that we break through the resistance we're at. This is a really tough area we are in. And until we break through, literally break through this area into 11,500, we are still not in a position to call this a true bull trend, because it's not a bullish trend yet. We're still overwhelmed by a bearish trend, and it's possible that we are in a bull trap still, and the bears will have the last laugh. So keep that in mind with your trading. Don't get greedy. You know, if you can make some profits and you want to make some profits or sell part of it and make some profits, you know, just don't get greedy and wait for what might be considered the perfect time, you know. So that's where we're standing right now. We really need to pay attention to the daily as it closes. We broke back down below 10,000. This is something that really needs to move in one direction or the other. So we need to either retrace down close to this line, somewhere in this area, and then head back up to try and break through again, or we need to really break through it now. But that's kind of what we're really looking at. And again, just looking at all the possibilities, looking at all the potential, and understanding where we're standing between the resistance above and the support below, and buyers versus sellers, and how this is going to translate. I think we need to be careful. I think we need to be watchful and definitely emotionless in our trading, that we really pay attention to the market, because I have a feeling that there's some things going on behind the scenes that we're not really seeing, that are influencing volume maybe in an artificial way, which could open this up for a bull trap. There is a huge potential that that is what is going on. Just looking at some of the huge sells when we hit 10,000, when we hit this 10,000, what was the high? It was 10,300. So 10,000, between 10,000 and 10,200. We had some significant sell-offs. It's only going to be more when we get between 13,000 and 10,500. So we're going to see a lot of sell-off in this area, which has the potential to push us back down into even 8,000, potentially 9,000 or 8,000, because those are our resistance and support areas to look at. So that's what we need to pay attention to. I really do not believe that we're out of the woods yet, and I do not believe that we should be calling this as a correction being over yet. I think that is completely premature. We have not seen enough of a breakout yet. If we get through to 13,000, then we can really consider us to be on a definite bull trend. And from there on out, we really have a clear shot to 17,000. And that would be a really cool sight to see running up into summer, possibly. Even sooner than that is definitely possible. We have to keep considering the possibility that we will bounce around. I'm not saying that that's how it's actually going to look, but something like that is still a possibility. It's still a possibility to get to a certain point where you have a large enough sell volume, similar to when we hit 20,000 over here, and not enough buyers, that enough sell-off happens that panic ensues and continues the trend down. Because this should have stopped here and it should have went up from here, but then you get panic sells, and then you have your whales come in, they buy again, and we get up here, they start selling off, you get panic sells all the way down. And that's kind of how a lot of Bitcoin trading goes, and you don't want to get caught up in that. So try to make more rational decisions. Don't sell at the bottom at a loss. That is a really dumb position to be in. Well guys, that's about it. I do have some other ideas for videos that I'm working on, some things that I want to share. I was going to actually do a video on Ellen DeGeneres and her nonsense video on Bitcoin. I thought it was pretty ridiculous, and I was going to have a little fun with that video. I still might do that, we'll see. But there's some ridiculous people that are talking about Bitcoin that really have no clue what they're talking about. And I know she was trying to make some jokes, but her jokes are really stupid, didn't really make much sense, and they weren't that funny. So honestly, if you're going to joke about it, come up with some good content, but hers was pretty lacking. So if you like Ellen DeGeneres, then I'm sorry, I'm not trying to put her down. If you don't know what you're talking about, you probably shouldn't talk about what you don't know what you're talking about, because it exposes you to criticism. And then you put it on national TV so everyone can see it. Anyways, guys, that'll about do it. Thanks so much for watching. Please hit that like button to let us know you appreciate our videos. If you're not subscribed yet, please go ahead and do that. You'll definitely want to make sure you're notified when we drop new videos. We're going to keep track of Bitcoin over the next several weeks. It's important to really understand that we should be looking at the beginning of March as an official end of the correction, or not so much an official, but you know, that is what we should be looking at. So until we really get past at least the last part of February into March, we're still looking at a potentially bumpy ride, and we can't really call a completion to the correction for several more weeks. So keep that in mind. So you want to keep track of our videos. We're going to be doing more. I should have an update for you guys on Sunday, depending on how things move, and if we see anything drastic, we'll see how that goes. But keep an eye out for a video on Sunday for sure. Definitely comment below and tell me what you're thinking, what you're seeing. If you notice something in the chart that I missed, I would love to hear it. Thanks so much for watching, guys, and take care.